Strap in, it's another episode of Between the Rows, the podcast of Glacier FarmMedia. I'm your host this week, Gord Gilmour. We'll be talking to JP Gervais of Farm Credit Canada about the bumpy ride of rising interest rates.
The one thing that was totally unexpected on my end was the persistence and magnitude of the inflationary pressures that we have currently.
Markets Farm's Bruce Burnett talks about the rough spring, unseeded acres, and how the crop is shaping up.
Certainly in the top 5% of years that we have had unseeded acreage in Manitoba.
But first, here's a message from our sponsor.
When you step foot on my farm, you become a part of it. I will tell you all about my land, what's working, what's not, as if we've spent our whole lives together. Our passion for farming makes us a community, and as part of that community, I want to see us all be successful, whether I'm working on your farm or with my job at Case IH. My name is Kelsey, I'm a farmer, and I work for Case IH.
Case IH, built by farmers.
And we're back. In the past while, we've seen inflation jump steeply, and interest rates are rising in response. JP Gervais is Chief Economist with Farm Credit Canada, the country's largest agriculture lender. He joins us now to explain what's happening. JP, thank you so much for joining us today.
Hey, it's my pleasure, Gord.
I'll admit that I've personally been quite surprised at how quickly interest rates have risen. Was this something that keener observers such as yourself were expecting?
Well, I do think that we expected interest rates to climb, and somewhat rapidly, yes. I believe, though, that the one thing that was totally unexpected on my end was the persistence and magnitude of the inflationary pressures that we have currently. We've been, and I'm guilty as charged for sure, we've been saying, inflation is going to be coming down. I still believe, by the way, that inflation will be coming down. I don't think that we have much of a choice, frankly. But going back even 12 months, we did think then that inflation was just a temporary thing. There would be just an adjustment for supply chains to figure it out. And I think the one thing that we underestimated was the strength in demand, the strength in consumer spending that I do think is creating some of the pressures. And now it's almost as if, some of the increases in cost that businesses face, they try their best to pass it on to consumers because the businesses need to do so to be sustainable from an economic standpoint. And I do think that it feeds on itself a little bit. And so it's really hard to control now. And so to that extent, I'm not surprised to see interest rates climb the way that they did. And we do expect interest rates to climb some more.
I get that there's a correlation between interest rates and inflation, but I'm not sure I understand exactly why. Can you give me the sort of back-of-the-envelope explanation of that?
Yeah, so I think it's also a very good point. Part of that question, or part of my answer to the question will be also on the role of the Bank of Canada, because I do think that there's a misunderstanding about what the Bank of Canada controls versus what it does not control and what it relies on the markets to really sort out, in terms of inflationary pressures and so forth, right? So when the Bank of Canada sees that inflation is above its target, and it will be okay with some months, maybe, or a period of time when the inflation is above the Bank of Canada range, which is between 1% and 3%. But at some point in time, it would say, inflation starts to be out of control, and we need to rate it in. And so we'll send a signal to financial markets, here, I'm going to increase what we call the overnight rate. It's really the interest rate at which financial institutions lend to each other on a daily basis. But by sending a signal to say, hey, we're going to raise this rate, it sends a signal to all participants in the financial markets and the economy to say that interest rates should climb. And they will climb accordingly based on the signal of the Bank of Canada. But the Bank of Canada only controls directly that part of the overall system. It does have other options as well to have an influence on interest rates, for example, in the bond market and so forth. But at the end of the day, the bank only controls the overnight rate. And so it increases its overnight rate. If it sees inflation getting interest rates overall in financial markets will actually slow down consumer spending, right? So when we see inflation, it's always about supply and demand. Like we are very familiar with that in the ag industry, right? It's all about supply and demand. So when inflation's high, prices are moving high. It means that we have demand that's very strong or supply that's too weak. And so the Bank of Canada, by raising interest rates, will look to slow down demand and weaken demand to some extent so that supply has a little bit of time to catch up with demand. Now, the thing here in the environment that we're in is that by raising interest rates, you really have not a whole lot of control over the supply. Ideally, you'd like maybe the central bank to be able to increase the supply of goods instead of signal to businesses, go ahead and increase your production. But we have some very limited, for example, in the labor market, we have a very tight labor market. And so it's really hard right now for businesses to increase production. So really the only instrument you have is to raise interest rates with the spirit of cutting back on demand. And with consumers spending less, we'll have less pressure on prices, and that will tend to slow down inflation. So you would likely raise interest rates up until you have a handle on inflation within the range that you're targeting, really.
As you mentioned, it's been stubborn, the inflation, and it seems to me, at least, it's been getting faster. The velocity is increasing. Does that mean that we should be expecting more and larger rate increases?
Well, I think the question now needs to be looked at from the perspective of what are the financial markets already expecting today? Because it's all about future expectations. As I said, the Bank of Canada controls one interest rate, and then the financial markets will move interest rates based on their expectations of what the Bank of Canada rate will be in the future. So right now, we've had, so far in 2022, we had the Bank of Canada rate go up by 125 basis points, so that's 1.25%. We had one rating hike of 0.25% and then two consecutive rate hikes of 0.5%. The markets are now expecting that we're going to get 3 or 4 more rate increases of 50 basis points. So that's already priced in. Like if you go in the bond market, but if you talk to your financial institutions, an institution like FCC, for example, the rates at which we borrow money from the market already have priced in that the Bank of Canada is expected to increase its overnight rate 4 times, or close to 4 times between now and the end of the year. So that means another 2% increase in the overnight rate. But that's, like I said, it's already priced in the marketplace. I think the question now becomes, as you said, given inflation is really high, it's not showing any signs of coming down, which is kind of the scary thing. I understand. I'm not afraid of inflation not responding to higher interest rates. I think inflation will respond to higher rates. I think we have already signals that it does. But in the data itself, when you look at inflation, it's not slowing down. And so the question really is what happens after or by the end of the year. And right now, and I don't want to get into the details, but if you look at a lot of different instruments in the financial markets, you can actually calculate what is the expectation of everybody selling, buying bonds, which is really what determines interest rates. And if you look at their expectations, basically they still have confidence that after we're done, and the Bank of Canada is done lifting interest rates by another 2%, that inflation is going to get under control. So right now, if you look at 2023, there is very limited expectations that we'll need more rate increases. It's going to matter quite a bit, quite a lot to see, interest rates go up by 3%, or the overnight rate is going to go up by 3%, 3.25% by the end of this year, right? So it's already priced in. I think the good news there is that financial markets have not lost confidence in the ability of the Bank of Canada to slow down inflation, because if it had, then we would see more rate increases expected in 2023. And that could trigger a few scenarios that obviously everybody would like to avoid, because we don't want to see interest rates go up by more than they already did. So I think we're in a good spot when it comes to the credibility of the bank, but I think we'll have more information, obviously, obviously, it takes time, right? And the one last thing, it takes time for higher rates to actually have a material impact on the economy, right? So consumers need to have their loans expire, they have to renew the loans at higher rates and so forth, see their purchasing power then decline. That takes a little bit of time. So we just need to give it a little bit of time, but I understand that the rate at which inflation is going up is leading people to ask a lot of questions, for sure.
I always think of economic things like inflation and interest rates as a bit like the weather. There's not much that we can do about it. We can just bring a raincoat along. What's our metaphorical raincoat for these economic times?
Yeah, I really like the example there. I would say, first, I think the raincoat would be risk management or financial risk management, but I would think that before taking on that raincoat, you have to ask yourself, well, do I have one? And if you don't have one, you need to go shopping for one. And the shopping for a raincoat here in this case, to me, would be, let's just make sure that we have a good understanding of the sensitivity of our financials in our business, and how the financials will move based on movements in interest rates, right? So there's this idea of, what will be my margins if interest rates go up by X percent? You know your loan portfolio in your business. You know if you need to make some investments in the future. You know what investments you made in the past. And so it's really this understanding that what is the exposure that I have as a business to higher interest rates? And it's not just about interest rates, because obviously you need to understand that sensitivity, but it's also the income that you're going to get to make sure to cover those interest expenses that may go up, depending, again, the structure of your loan portfolio. If you have, variable rates or loans that are priced on more long-term, but on the fixed rate, those type of things, it's really just to understand that sensitivity. And so once you've done that and you picked your raincoat, I think now is the time to really just implement whatever risk management strategy makes sense for you. You understand your exposure, you understand your own risk tolerance to higher interest rates, and maybe you have a little bit of tolerance, again, depending on your circumstances, or maybe you have little tolerance. Everybody will be different. You just sit down with somebody and try to figure this out, and then, that raincoat is, do I need to lock in interest rates now? Am I in a good position and don't need to do anything because I have done, the financial risk management in the past, and I'm still in a very good position now, and my loans don't have to get renewed until 2 or 3 more years down the road, so I have a little bit of time. So it's just that understanding and the strategy behind it that I would say is that raincoat in this case.
If there was one thing you could tell every farmer in the country to do to prepare, what would it be?
Well, I've used this line quite a bit, actually, in recent past, and I think it's still very relevant, and I would sum it up to be a CEO. What I mean by that, if you think of your farm, if you think of the CEO of any business, the CEO is not the expert at everything. CEO has a degree of knowledge about different things in the business, whether it's production, financial risk. If you're a large farm, you got employees, you do your own marketing. There are plenty of different areas of expertise that you're going to have some knowledge on. But really, if you look at the successful CEOs, it's not to be the top expert at all those things, but it's to be able to surround yourself with experts in all these things, right? And so there might be 1 or 2 things that you have no need for expertise or external expertise, but there are other things, perhaps on the legal side, on the financial side, on the production side, that you need expertise. And so if we have this mindset of be a CEO, meaning that I don't need to be an expert, but I need to make sure that I surround myself with partners that have my success in mind, I think that's the one thing that will take you far to that next step. And that's going to be, let's face it, it's probably going to be very volatile in the next few months. We're, early in the summer already. There's lots that we're going to learn over the next few months in terms of crops, the size of the crops. The size of the crops will dictate pricing, for the next marketing year, which will as well influence on the livestock side of things, the profitability. There is just going to be lots of volatility given the external drivers in the economy and the geopolitical environment as well. That's quite cloudy volatility right now with the war in Ukraine and so forth. So, given the volatility, I think being the CEO would be the one thing that I would say would matter most, in these times.
Well, thanks, JP. I really appreciate you taking the time to run us through some of these very interesting times we're in.
It's always my pleasure. Thanks so much for the invite.
That was JP Gervais of Farm Credit Canada. He offers some keen insight into the rising interest rate environment we all find ourselves in. This is Between the Rows, the podcast of Glacier FarmMedia. I'm your host this week, Gord Gilmour. It's been a bruising spring for growers in parts of the prairies, and it's resulted in significant unseeded acres. Bruce Burnett is Director of Markets and Weather for Markets Farm. He joins us today to fill us in on this year's crop. Bruce, thanks for joining us today.
Good to be here.
So a month ago or so, you were on the show and you were talking about the prospects of some unseeded acres on the eastern prairies. A month on, how's that all shaken out?
Well, we're certainly seeing some unseeded acreage in the eastern prairies caused by the rainfall that we've had over the past 60 to 90 days. But again, it depends on which region you're looking at in terms of the extent of it. But for instance, Manitoba crop report last week indicated that there were close to 900,000 acres that went unplanted in the province. And again, you would expect some from eastern Saskatchewan as well. We'll have to see as time goes on as to how much of that, how close those areas are in terms of the initial expectations. But I still feel that we probably have 1.5 million to 2 million acres that went unseeded, or certainly less than that were planted less than last year. Again, because of the fact that we had this excessive moisture condition.
Now, periodically, we do see some unseeded acres. How's this kind of stack up in terms of past years? Is this like a significant amount, or like it's about 9% of the Manitoba acres? I think if I read the same crop report you did, so that seems pretty significant to me. How does it sort of rank?
Again, it's not the worst that we've seen, but certainly it's certainly in the top 5% of years that we have had unseeded acreage in Manitoba. Again, this extends into Saskatchewan as well. So the entire area that's been impacted is a significant area in the prairies. One of the things I would like to point out, this is just the area that farmers were not able to seed this year because of excessive moisture conditions. Because we've had some rains after seeding here, I think you're going to see, again, some of these crop areas abandoned, or at least portions of fields that will have to be abandoned because the rains caused the seeds that in areas that were planted to either not emerge or killed them off or resulted in really, really poor emergence. So again, I think the story is not going to be out here until we get the harvested acreage numbers, and that doesn't occur until well later in the year. So we not only have been impacted by area that couldn't be seeded, but also by areas that were essentially inundated after seeding as well.
And it seems to, from what I've heard, that canola's had an especially rough start. What are you seeing in that space?
Well, again, canola, I guess if you want a generalism about canola, is that it doesn't like to have its feet wet, especially early on in the growing season before it can get the roots established. So this has not been a really great year for canola establishment. There's also been some significant pressure from pests, especially flea beetles this year. So the combination of those two things has resulted in some very poor looking canola crops out there. We'll see, generally speaking, canola can recover, but I would say especially in these areas where we've had where the crops got seeded and then were inundated again with some standing water for anything more than a few days. Certainly, those areas in canola fields would be most likely lost now. So, again, I think the canola has been impacted more than, let's say, some of the cereal crops, but even the cereal crops have seen some stress here from the excess moisture.
And at the other end of the spectrum and other end of the prairies, what's the situation like out west?
Well, basically, the rains out west over the past 2 weeks really did help. Amounts were generally between an inch, 2 inches, depending on the region. There were some areas that received less. Those areas, and they were mostly in Saskatchewan, that received less certainly are vulnerable right now still to drought conditions, and we do have a chance for more rains this week. So hopefully some of those areas fill in. I think the thing is that people are assuming that because we got rain that the things are now good across those western growing areas. This is only the first rain in what needs to be a series of rains here through the growing season, because we do need to have rains come in very consistently because of the fact that we have very little subsoil moisture. And surprisingly enough, even with these rains in parts of southern Alberta and western Saskatchewan, over the last 3 months, we've still received below normal precipitation. So, again, that's just reinforcing the point that we need follow-up rains here, especially as we move into the critical summer period here.
And now I know it's kind of a tough question to answer because it's a big region when you talk about the prairies, but generally, how's the crop looking so far? And what's it going to take for it to make up a bit of ground, especially in some of the areas where it's behind?
Well, I think the cure for being behind is going to be warmer temperatures. And fortunately, we're seeing, at least for the first half of July, it looks like we're going to be in sort of normal to above normal temperature range over most of the prairies. So that's good news, because that will help the crops catch up a bit. Again, it's a double-edged sword. If we get above normal temperatures, we do need to see enhanced precipitation. But I think basically we really do need two things to get this crop in this year. We need some heat during the growing season as well. It would be nice to see an extended fall period, where frosts come in maybe a week or two, a week or two later than normal. Would be something that we really would like to see, especially in some of the eastern growing areas.
And switching gears a little bit from the production angle, let's look at some pricing. Prices have been falling a fair bit lately. What should we be watching there?
Well, again, I think we do have to realize, and I think everyone, basically expected prices to come off. The move has been dramatic, especially in wheat and canola. But I guess, again, other than the magnitude, this was not unexpected. What we are doing in the market is transitioning to the new crop pricing regime that we're going to see for the 2022-23 growing season. Obviously, conditions are better in Western Canada than they were last year. I think the market will be debating how much better they are, but basically we're going to have a bigger crop than we did last year. So there will be pressure on prices. Globally speaking, we're well into the wheat harvest now. Globally, especially among the exporters, the U.S. is moving along very rapidly in their winter wheat harvest. The European harvest has started up a little bit early as well. Places like Russia and Ukraine are also starting their harvest activities on the winter cereal crops, especially. So again, we'll see some pressure there. The one feature of the price drop, though, this past month here, or 3 weeks especially, has been the fact that we've had some very volatile conditions in the outside markets. So essentially the macroeconomic conditions have come in and hurt not only equity markets, not only bond markets, but also have come into commodities and pushed them lower. So again, we'll have to see, but with commodities especially, we are going to see things return to more fundamental basis here. Like, do we have enough wheat? Do we have enough canola? Do we have enough oil seeds to satisfy world demands? And that's going to essentially give us an answer in terms of where prices are going to be. But for now, this is initial sell-off caused by some outside conditions, as well as prospects for a reasonable crop this year, especially in North America.
And what will be the things that you're going to be watching then as this season kind of grinds on?
Well, certainly, I think primarily, again, the rainfall and amounts, especially in western parts of Saskatchewan and in Alberta. That's going to be critical here as we go through this growing season, as well as what the crop development's like in the northern and eastern growing areas where, as you said earlier, we are a little bit behind. So we do need to catch up on in terms of the heat units, etc. Those are the primary things. And by the time we reach the middle to late August, we'll be looking very, very closely at the temperature forecasts in terms of, do we get a frost that's normal, a little later than normal, or a little earlier than normal? That's going to go a long way to dictating what kind of crop quality we would have this year, as well as impacting maybe the amount of production that we would have. So there's still lots of risks to look out for as we go forward in this growing season.
Bruce, as always, thanks for making sense of that for us.
Thank you.
That was Bruce Burnett of Markets Farm with the latest on this year's crop and its challenges. And that's another edition of Between the Rows, the podcast of Glacier Farm Media. I'm your host, Gord Gilmour, saying so long for now, and we hope you'll join us again next week.
When you step foot on my farm, you become a part of it. I will tell you all about my land, what's working, what's not, as if we've spent our whole lives together. Our passion for farming makes us a community, and as part of that community, I want to see us all be successful, whether I'm working on your farm or with my job at Case IH. My name is Kelsey, I'm a farmer, and I work for Case IH.
Case IH, built by farmers.